of said, look, we're going to spend this session based on the response that we got to our last one, talking about the ways in which people who work as freelancers or contractors can try and retain more of the money that they earn from a tax point of view. And it is really designed to really provide you with practical advice around being much more tax efficient. And we're not experts in the area, but we have somebody who absolutely is. So I'm going to let Jimmy Sheehan take over in a second, but just to give you a little bit of background on Jimmy. Jimmy is Managing Director of Contracting Plus. Before joining Contracting Plus himself, he built his own successful accountancy practice. He worked as a consultant with some of Ireland's best known accountancy practices as well. He has a knack. We know he has a knack because he's shown us some of the tricks. He definitely has a knack with coming up with new ideas to help contractors maximize their retention rates around their tax take. Jimmy, you're very welcome, and thanks again for giving us so much of your time over the last couple of weeks, but also for the session today. So, Jimmy,
I'd say just to, if people want to jump in with questions, look, that's perfectly fine. You can see my screen there, can you?
Yeah, all good.
Great. Okay, so look, what every freelancer needs to know about paying less tax and building a nest egg. I mean, that's the title for today. Peter's done an intro on me, so we can skip that slide. So I'm going to move reasonably quickly. I'll slow down on the first couple of slides, but you'll start to see a pattern, and I'll speed up just to give us a chance for questions at the end. But what we're going to try and go through today are the common areas where tax savings can be made. We look at the amount of tax, so I have kind of ideas or figures done around that. Tax can be saved in each area. How to build wealth for the future. I mean, that's why we work. We work to pay the mortgage, to pay the bills, but obviously we want to have a good lifestyle in retirement as well. And then just there'll be a theme of freelancing versus employment. I think that's really important. It won't be a specific discussion, but it's going to be obvious, through the areas we cover. And one thing you'll note as I go through some of the tax saving ideas is they all relate to being a limited company or operating through a limited company. And I know a lot of people, especially freelancers, will be, the default position is sole trader. And there's often this perception that it's a big hassle to have a limited company, or a big expense to have a limited company, or changing to a limited company is too difficult. And I just want to let you know that it's actually really easy to make those changes. And it's cleaner to have your own limited company. But also, unfortunately, sometimes things do go wrong. Not for everybody on screen today, but one of you, potentially something could go wrong. And a limited company gives you that protection of limited liability. It protects your personal assets, protects your home, protects your personal pension. So use the legal framework that exists here in Ireland to your benefit. Freelancing obviously isn't for everybody. You become the CEO of a business overnight. A lot of people on here in the marketing space, but what about finance? What about sales? What about, how to best price my services? You will have no experience in lots of areas that you'll have to get up to speed with very, very quickly. And so what I always say to people is look at the people you surround yourself with, and don't look at every time you spend money as a cost, because some of those spends are investments in yourself, investments in your business, and as such then an investment in your future. And I suppose a great analogy is do you remember being a kid, and as a younger kid, one of the older kids said to you, if you grab that nettle in front of you and squeeze it really tightly, it won't sting. And that's actually true. If you reach out and you grab a nettle and squeeze it tightly, just grab it, it's not going to sting you. But if you kind of fumble and you're half in and half out, you're not sure, you're going to get stung. And freelancing is like that. If you're going to make a go of this, or if you're making a go of this, you've got to jump in. You've got to just grab freelancing. You've got to grab self-employment, and make the most out of it. You can't just teeter around the edges. So with that in mind, I'm going to jump into some tax-saving tips. I'm going to start with expenses, because it's always one of the bigger questions. What can I claim? I mean, we've had people come up to us and say, look, can I, I'm operating from home and I've got a lot of grass in the front garden. The clients come up to the garden, so I have to keep the grass cut, so I'm buying a ride-on lawnmower. So it's a business expense because clients come to the house. You're like, no, that's not going to work. The revenue aren't going to sit and say, yeah, we agree with you on that. But what are the obvious things? working from home, hybrid working. Freelancers have been doing it for a long time, but probably more so now with the way the world is going. So anything you're fitting out your home office with, your desk, your chair, your lamp, the home printers, bicycles, the bike to work scheme. If you're operating through a company, the bike to work scheme, 52% back on your bike. Stationery, think of paper for the printer and pens and pencils. If you're like me, if you've got kids, you put printer in the paper on a Monday morning. You actually haven't printed anything by Tuesday afternoon and all the paper is gone, but there's paper airplanes everywhere and there's coloring pencils and all kinds of stuff. So, all of these little things add up. If you go and you meet someone for a sandwich, and that's business development in terms of, can I get some of your business, or maybe you're partnering with another freelancer and you're thinking about how do we come together maybe to go in and win this tender, this piece of contract. That's business development, those coffees, those lunches, newspapers, magazines that relate to what you do. So, if you're in PR, you're probably buying all the newspapers still. That could be an outlay of, €10 a day, €15 a day, regardless of the stuff you're paying online. But if that's the business you're in, where you need to know what's going on in the news, then there's a justifiable reason for saying, yes, that's a business expense. And then the bottom left there, income protection. And income protection is essentially a policy that protects your income. It's an insurance policy that protects your income. And a lot of people don't realize it exists or don't realize the importance of it. And essentially, so I have income protection because I say, well, actually, what happens if I can't work? I mightn't be dead or I mightn't be sick, but something might happen. I might, temporary blindness, or I do a lot of typing so I could lose the use of my hand if I had an accident. And what's going to happen there? So if you can't work, income protection protects your income. It's an insurance policy that, for depending obviously on your age and your health, but for probably about €100 a month, you could insure an income of maybe 75 or 80,000 euros in the year. And that's a tax deductible expense. So it's really only costing you half that. And if you're the only person providing for you and your family, then that's an important piece. So just don't forget the obvious expenses. So we're going to see a couple of slides like this now. Pension obviously is an obvious expense. And what I'm going to do, I'm going to work through this slowly at first, and I'll speed up because the template is the same. And what I'll do is I'll send a copy of these slides to Peter and Una, and they can share them with you afterwards. So you'll have the figures. But what I'm trying to do here is say, look at your pension contribution. And if we look kind of at the working from the bottom up, the third line up from the bottom, pension payment of €6,000. So let's say you're paying into a pension that's €500 in a month. That's €6,000 in a year. If you're a sole trader and you're doing that, you actually have to, and bear in mind, you get taxed. As a sole trader, you get taxed on everything you earn, whether or not you've collected the money, whether or not you've actually used that money. So if you earn €50,000 but only spend €30,000, you get taxed on 50,000. If you earn €100,000, you leave €30,000 in the bank and have only spent €70,000, you still get taxed on the €100,000. With companies, it's slightly different. So if you want to put €6,000, if you want to have the €6,000 cash to put into your pension, you need to have invoiced clients of €12,500. Okay. You put, invoice them €12,500. Then what you're doing is you're going to pay yourself a salary of €12,500. The tax on that is €6,500. Now, what I'm assuming here is that we've already used up our first €36,000 at the lower tax rate. Okay, so your first 36,000 that you earn probably pays for your rent or your mortgage, your food shopping, the necessities. And then you're saying, okay, what cash after that? What earnings after that? How much can I put into a pension? So take a salary of €12,500, pay tax of €6,500. That leaves you €6,000 in your hand. You pay that into the pension. Okay, at the end of the year, when you do your tax return, you can declare that you paid €6,000 into a pension and you get €2,400 back, essentially 40%. Okay, now let's look at it from a company point of view. Top line, invoice value, same invoice value, €12,500, but the company pays into the pension for you. There's no BIK. BIK stands for benefit in kind. Sometimes when companies pay for something for you, the revenue look at that and say, hey, you're getting a benefit from that. So, we're going to tax you on whatever the value to the company was, but there's no BIK on pensions. So the cash in the company after the invoice, same invoice amount, €12,500, there's still cash in the company of €6,500. So what are you going to do with that €6,500? Or you might decide to take it in salary. So that's €6,500 at the higher rate of tax, 3,380, which gives you take home pay of 3,120. So now in your hand, you've got €3,120. As a sole trader, after your tax refund, you have €2,400. So you've a saving of €720 straight away. Or if you don't take that in salary, if you don't need that salary, you've €6,500 still in cash in the company. I can't see anyone on screen. So, does that make sense to people? Would anyone like me to explain that a little bit further? And it'd be important if you want me to go through it again, because we follow the same concept for a couple of other examples.
I think that's really straightforward. Anyone here initially have a question for clarification at this point, or should we move on? I think move on at the moment, okay. Jimmy. Yeah.
Okay, so look, pension is always a big one. And look, guys, pension is so important. I always say to people, like, it doesn't matter what age you start. Obviously, the earlier, the better. And it doesn't matter how much you can put in, but obviously the more you can, the better, because it's tax-free on the way in and it's tax-free on the way out for a big chunk of it. So either 25% of your pension pot or €200,000. Okay, so if your pension only gets to €100,000 over your lifetime, you can still take the first €25,000 tax-free. So club and gym memberships, people often forget about these. So again, we're saying if you have to make a personal payment, you have to have an invoice value of €2,083. To pay yourself that €2,083, there's tax payable of €1,083, which leaves you a take-home pay of €1,000. So you can head to your gym and pay your €1,000 membership for the year, your golf club, or whatever it is, whatever club or membership you're part of. Again, let the company do that for you. Same invoice value, €2,083 that you would have had to earn as a sole trader. The company can pay the membership for you, but the revenue, say in this instance, you're getting the benefit of that membership. So the company paid out €1,000, so you get taxed on the €1,000, right? Which adds another €520. But from the same invoice value, we're leaving €563 in the company. Okay, that's €563 in the company. And it'll be important why we're leaving it in the company coming towards the end of the slides. Then you have the small benefits gift card. This is a voucher essentially for €500. So again, a company can pay its employees. That includes the directors who are the 100% shareholders. So a company can pay its employees or give its employees a voucher for €500 every year, every single year. And there's no BIK on that. Okay, so that means that if you're operating through a company, you could go out, you could buy a €500 voucher for Tesco or Lidl or wherever you do your shopping. Okay, and you could chip away at that and use that, buy that in January and chip away at it. Or you might buy €500 worth of Ryanair vouchers, and that'll go towards part of paying off the family holiday, or €500 for, a shopping center nearby that has lots of shops, or €500 Me to You card where you can spend all over the country in different shops. Either way, it's €500 tax-free. Why wouldn't you take it? To have €500 in your hand as a sole trader, you need to invoice €1,042. So rather than invoicing €1,042, taking that in salary and then having €500 in cash, invoice €1,042, buy yourself the gift card, almost cash, and it leaves €563 in the company. All right, so we're building up money in the company. Every time we do something clever, we're building up money in the company. The annual travel pass, now, this is a little bit of a bone of contention, because we would have heard on the news last week that even though the government is giving people the right to work remotely, to hybrid work, they're not actually planning to do anything with the annual travel pass, which means you still have to buy an annual travel pass for 5 days travel, even though you might only be traveling 1 or 2 days a week. So, I'm not going to spend as much time on this, because it might, unless they change something, it mightn't be as relevant. But just as an example there, the average travel pass that people might buy, again, do it through the company. No BIK on an annual travel pass when you buy it through the company, which would leave it an excess of €1,134 if you took the balance in cash, or it leaves €2,362 in the company. Again, I know I'm going through these quite quickly, but I am conscious of time, and I'm sure there'll be questions at the end.
Yeah, we have a couple of questions in actually already.
Do you want to throw them at me now?
Yeah. So one question is, can you highlight if there's any differences between sole trader versus limited company in the examples?
Yes. So taking this one as an example, on the left-hand side of the screen with the red banner at the bottom, that's essentially as a sole trader.
Yep.
Okay. So you as a sole trader, you get taxed on all your profits. It doesn't matter whether or not you use those profits. Whereas in a limited company, you only get taxed on what you take out of the company for personal use. Anything you leave in the company will be taxed at corporation tax rates, which is 12.5%. But that'll become a little bit clearer when we get to a slide in a minute where we see kind of just an example of all the savings.
Okay, brilliant. And one other question, probably more broadly, just linking to Contracting Plus, do you help set up and manage executive pensions for newly formed limited companies as a service?
Yeah, we have we have a whole separate under our company structure, a whole separate investment arm that looks after pensions and protection and, you know, life insurance and all those types of things. So yeah, short answer, yes.
Okay, brilliant.
Okay.
I think Jude Healy has a few questions, but we might just kind of come back to Jude, because I think they're broadly speaking about office expenses. So we can kind of maybe circle back to that.
Yep, no problem. Health insurance is the next one. Again, so something a lot of people don't realize about health insurance is that they have personal plans, and that's the stuff you see when you Google and you go online and you see on the ads, whether it's Leia or VHI or whoever it happens to be. They're what we call personal plans. But all the health insurance companies also have corporate plans. And they have to, if you ask them for the corporate plan information, they're obliged to send it out to you, whether it's by email or by post. Okay, so corporate plans are open to you as well. But if we take a personal plan here, if we say that, look, you're taking out a health insurance plan and the premiums are €1,500 a year, that means at the moment, as a sole trader or as an individual, you would have to earn a gross income of €3,125. So invoice value, €3,125. You're going to pay tax of €1,625 on that, which is going to leave you €1,500. And that includes, when you buy health insurance from a personal plan, it already includes a discount built in, a tax element of a discount built in. You take that through the company, so working at the top line here, €3,125, same invoice value. Now you'll see the health insurance cost has gone up to €1,700 because you're not getting that personal tax deduction because you've paid a personal investment. Okay, the company is paying it for you, so it goes up to €1,700. There's a BIK on that, benefit in kind tax. The revenue says you have the benefit of a health insurance policy that's worth €1,700 in the open market values. The tax element of that is €884. That still leaves €541 in the company, even though you're paying BIK and even though the policy is €200 more expensive. Or if you wanted to say, well, actually, I want to take that money out of the company, you'd still have €260 in your hand. So you're still better off even if you take the balance out in salary. But leave the money in the company. You were doing it the other way as a sole trader and you only had €1,500. You're getting the same benefit now through a company, but you've got €541 in the company. Okay. Now, this one, the car is a little bit different, but it's so important to put in, I think, because of the potential tax savings. And the first thing I'll say is I have clients have come in front of me and said, what can I spend my money on so I can save tax? And my answer is always, don't spend your money on anything just to save tax. What you do is you figure out what it is you need to spend your money on. What do you need? What do you want? What do you like? And if you're going to spend that money anyway, then the second question is, can I structure that purchase in a way that would help me save tax? Okay, that's really, really important. You can never spend money to save tax because you've had to spend that money just to reduce a tax bill. So you're still cash down. So if you don't need a new car, this is not relevant to you. Okay. But why I've looked at this is because the e-cars, the electric cars have BIK exempt. Again, the revenue doesn't charge you personally a tax for the use of the car if a company gives it to you. And that's up to the value of €50,000 for electric cars. So they had no cap at the start. So you had people going buying Teslas and BMW i8s and all these really expensive cars. And they have those now and there's no tax on them. So it's very, very, very affordable to do it that way. But they still have a cap of €50,000 on them. So I just took an e-golf as an example. And, you know, I've assumed that none of us just have €35,000, €37,000 lying around. So 37,000 euros is the rough cost for an e-golf. You get a 5,000 euro VRT rebate, which leaves you with 32,000 euros needing to finance. So over 4 years, on the left-hand side here, loan repayments work out at about 790 euros. The insurance figure is in at 125 euros a month. Might be a little steep, but in fairness to the two ladies here in the office who helped me put these slides together, they're both in their 20s, so maybe their insurance is a little bit more expensive at that age. Tax is a tenner, fuel and electricity very, very small, and then a figure for repairs and maintenance.
Yeah.
And just a random figure, another figure. So what we're saying is every month you're going to need 1,200 euros just to run that car, to pay off the loan, pay the insurance, the tax, 1,200 euro, okay? In order to have 1,200 euros every month in your hand, you're going to have to invoice 2,516 euros, okay? You'll pay tax of 1,308. That'll leave you the 1,208 euro. And that figure might be down as low as 900 euros, or depending on what car, what loans, or whatever else, it could be up a little bit higher.
And just to clarify, Jimmy, no BIK on e-cars.
Up to the value of 50,000 euro.
Okay.
Now there was talk in the last budget about bringing that down to 40,000 euro, and then 35,000 euro, and then 30,000 euro. But they haven't said in what years though they're going to phase in those reductions. But two things to consider here. The first thing is, if you need a car, or you're thinking of changing your car, then who cares if the values are going down? Make the most of what's available now. The second thing is, will they bring them down by that much, and will they bring them down soon? You look at how far we are in terms of our carbon requirement, carbon reduction requirement, and why would you not keep incentivizing people to take old petrol and diesel cars off the road and replace them with electric cars? So, will it happen? Will it not? Who knows? But again, don't spend the money to save tax. Spend the money because you were thinking of upgrading your car, changing your car anyway.
Right.
So in this company payment here, same invoice value, 2,516 euros, gives you car expenses of 1,208. Now they're all paid by the company because it's a company car. Okay, no BIK on that. That leaves cash in the company of 1,308 euros. Okay, if you decided to take that in salary, you'd have an extra 628 euros in your hand every month, or leave it every month in the company, 1,308 euro.
Just a quick question on the car situation again, Jimmy. Question here about whether does this not have to be a commercial vehicle? Can it be a family 7-seater?
It can. The only electric 7-seater I know of at the moment is because I have 4 children, so I need a 7-seater. Is the Tesla Model X. Now, I can't afford a Tesla Model X, and I wouldn't spend that much money and then put my 4 kids into it because it'd be ruined. But if you do go for that higher end car, and let's say the cost 100,000 euro, then the first 50,000 euros of the cost, there's no BIK on. And the second 50,000, there is BIK on. BIK on a car is 30% of the original market value. Okay, not the price you pay for the car, the original market value when it came to the market. So let's say you buy a car that's worth a regular car, Volkswagen Passat, that's 30,000 euro new. 30% of 30,000 euros is 9,000 euro. So, and the tax on that, roughly speaking, is 4,500 euros a year. So what the government will say is if you buy a Volkswagen Passat worth 30,000 euros through your company and you have the use of that car, the benefit in kind is 30% or 9,000 euros. So the tax is 4,500 euros, which means the tax payable is somewhere between 350 and 400 euros a month. Now, the company pays the tax, the insurance, the fuel, the repairs. So depending, and you can reduce that 30% with, if you're doing a high amount of business mileage that has to be recorded. But I can give people some more information on that. We could spend a lot of time talking about BIK. And the vehicles, the commercial vehicles, the BIK is not 30%, it's 5%.
Yeah.
And again, commercial vehicles now is down to a 2-seater or 3-seater van. It used to include the crew cabs, the likes of the Nissan Navara or the L200, but it hasn't included those for a number of years. They're no longer considered commercial vehicles for company car BIK purposes.
Well, we've just put a link to contracting clause considerations when purchasing a car through a limited company into the chat box. So maybe if people want to take a look at that afterwards, so we can.
Yeah, it's got a couple of good examples in there as well.
Excellent.
Okay. This one, employing a spouse or family member, is something people often forget about. So if you have a civil partner or a spouse who isn't working, then and they're doing some work for you, and the work must be, I'm conscious that we're being recorded now, but the work must be, the work they're doing has to be relevant to your business. So they might be doing administration for you, helping you raise your invoices, doing debt collection calls, maybe doing, if you have product as part of your service, they might be doing some deliveries. But and bear in mind, you can pay someone if they're doing administration for you. If you've got a kid who's helping you at the weekend, 14 years old is the legal age of a family member working in Ireland. 16 years old if they're non-family member. But if you pay somebody €1,000, so if you've got that spouse or civil partner who is doing all this work for you, and if they stopped doing that work, you'd probably have to go out and pay somebody to help you do that work, or stay up till midnight or 2 a.m. in the morning doing it yourself. But let's assume you went out to get somebody to do that for you. Chances are you'd pay them €1,000 a month, 250 quid a week, say, okay? Because they have no other income, they don't pay any tax, they don't pay any USC because they're under the threshold, and they have a PRSI of 4%, so €40. So the take-home pay is €960. Now, if they're doing that work for you, and the market value of that work is €1,000 a month, then pay them, employ them and pay them, and then your household out of that €1,000 takes home €960. Whereas if you're not paying them and then you're just taking it out under your income, then you're only taking home €480 after tax. So there's a huge benefit in employing a spouse, a family member. Now, I've used €1,000 there because I've just said, look, this is obviously someone who's just doing a little bit of admin, a couple of days a week, a few hours a day, whatever the case might be. And I've used a figure there of €1,000 a month because it keeps them out of the tax net. So it's very, very efficient. But if they're working, if they're even doing more work and they don't have another income, pay them more and still use up their 20% bracket. Again, it needs to stack up. If the revenue commissioners say, hey, look, what's John doing for you? What's your spouse John doing that you're paying him, €20,000 a week, or €20,000 would be nice, €20,000 a year. Look, it's got to stack up. It's got to make sense, but you get advice around that from your accountant.
Jedi, can I just ask Jimmy, does family members apply to retired parents?
Would do, absolutely, yeah.
Okay.
Yeah, and again, depending on the age, if they're retired, they could be outside of the USC net, they could be outside of the PRSI net, so that could be more efficient for them. Yeah.
Okay, thank you.
So, what do you do with all your savings? All right. So what we've done here is the growth tree, if you like, has shown us in a year what we could potentially have left in our company. Not earning any more money, not putting up our prices, not finding new business. Now, granted, everything on the tree won't apply to you, every individual listening in, but you can have a look there. The employing a spouse, 5,760, then the bottom right. That could be more if you're paying them more. The pension of €6,500, that could be less if you're paying less than 500 a month. It could be more if you're paying more than 500 a month. Memberships, if you don't have a membership, okay, that's not going to apply. It's only €563. A small benefit you should definitely be doing. The travel pass, look, it mightn't apply, but maybe the trips you are taking are bona fide business trips. So if you're going out to a client and you have to get the Lewis or the bus or the train, there's potentially you can claim the travel expense anyway. So there's 31,000, 32,000, but even if there's only half that, even if there's only €15,000 there, it's still a big chunk of money to be leaving. So, if you're going to give it everything, if you're going to give your freelance business everything, then make sure you get as much back out of it. And that's what I suppose I'm trying to show today. It doesn't matter, why you're freelancing. It doesn't matter how much you earn. What matters is how much you keep. Okay. So, when you have that money and you've done the clever things, what do you do with the tax you've saved? So it's about growth in your financial future. How are you going to use it? So there's a couple of examples here in terms of how you might use that, or why you might leave that money in the company. So the first one is entrepreneurs relief. Now, entrepreneurs relief is a capital gains tax relief. And what that means is if you sell an asset, a business asset, so shares in the company, then the first €1,000,000, that sounds like a lot of money. It is a lot of money, but the first €1,000,000, you get taxed 10% on rather than 33%. Okay, that applies if you liquidate the company. So if you build funds up in the company over a period of time, okay, and then the company you decide to liquidate the company because you're going to retire or whatever the case might be. Let's say you have, well, what did we talk about there? We talked about a figure of, was it 32,000? So let's even say take, €20,000 of that. And let's say you're 45 years of age now, and you're going to do this for the next 20 years. So you've got 20,000 a year for the next 20 years. That's €400,000. So there could potentially be €400,000 very, very easily sitting in your company bank account. You liquidate the company. Now, with Entrepreneurs Relief, it means the tax you pay when the company gives you, as a shareholder, that €400,000 in cash, you give the taxman €40,000, as opposed to 128 thereabouts, something like that. So a really, really nice relief to have, Entrepreneurs Relief. Okay, long-term picture, years ahead, but mind the pennies, my grandmother used to say, and the pounds will mind themselves. Retirement relief is another type of capital gains tax relief, and if you were in a fortunate enough position to have €750,000, you can avail of retirement relief again in the company between the ages of 55 and 65. So again, let's say you're at that €30,000 figure, or maybe let's say you put more money into a pension, you're a higher earner freelancer, and that goes up to €40,000 over the next, what did I say, 20 years? You could be at €800,000. So you can avail of retirement relief, which means you retire from the company. Now, you don't have to stop working. You could start work through a different structure after that, but you can retire in that company, and that €750,000 is paid to you tax-free, no tax at all. Now, if your spouse or civil partner is also a director of that company and has been working in the company, they would need to be working in the company, and there's a couple of criteria, then it's that $750,000 doesn't relate to the company, it relates to the individual. So you could have 1.5 million. But again, these are big numbers, and a lot of the time they're way out of what any of us can achieve. But what if it's €150,000 or €200,000 or €250,000 over the next 20 years, 25 years? That's more than achievable. And that's a nice tax-free lump sum to get. But I'd always suggest putting money into pension as well.
Yeah, actually, that is a question that we've had here. Is it better to leave money in the company or put it into the pension? What do you think?
Look, it's a totally personal decision in terms of what your circumstances are. At the moment, you can build a pension pot tax-free up to €2 million, which is would be a very hefty pension pot, and would probably give a lot of people a better retirement life than they have in income if they manage to get up that high. However, you might need the money now, or you might want rainy day money. So you might decide to do some things where you leave money in the company if that's what you're worried about, or you might want to save up and say, okay, I'm going to start saving up money in the company because in 3 years' time or 4 years' time, I'm going to need to change my car, and I want to have the money there, and I could just buy the car outright, and I don't have to worry about borrowings then. The company could do that. You can put up to, depending on your age, so if you're aged between 40 and 50, I think it's 25%. Of your income, up to a maximum of €115,000 can go into a pension. So 115, so that's 28,750. So that's a lot of money could go into a pension every year. If you were that type of earner and you can afford to do it. And that percentage then, that 25% goes up to 30% and 40% as you get older and you get closer to retirement age. So it really is down to personal expenses. I'd say speak to a financial advisor. Some really good financial advisors, can introduce you to, and will turn around and say, well, tell me about your expenses. Tell me about the kids you have. What age are they at? Do you plan on giving them money to get married? Do you plan on giving them money for a deposit for a house? What's the best way to save for that? Is it to put it in the company? Should you be giving kids shares in the company so they can take out a piece of money tax-free? There's lots of different ways. Couldn't answer that question outright, right, because every company is going to be different.
Yeah. No problem. Thanks, Jimmy.
So look, before I stop sharing the screen there, just two quick things. The first one is if everyone please could help out here. We do a survey on Ireland's project economy. So that's essentially how freelancers, contractors, basically the solo self-employed people in Ireland, how they work, how work affects them. You could take that survey today at tcd.ie/business. You'll get a link to it through the Trinity College Dublin website. It closes on Friday. So if you haven't done it, I know Peter and Una have been kind enough to share that on social media. I'd really appreciate it. It'd be great to get some figures in there. And just before I take questions, then I'd say maybe couple of things to finish off. Just in general, nothing to do with tax, but I'd always say, price yourself properly. Have confidence in what you do. Don't say, well, it's X amount of euros per hour. It's how many years, how much money have you invested into your skill, and how difficult is it for me? Like if you're a web designer, how difficult is it for me to design a website? Damn difficult, let me tell you. I'm going to spend hours and hours and hours even figuring out where to start. You might be able to say, well, I can give you the website you want. It take me I can have it put together in 3 days, 3 8-hour days, 24. Ooh, how much can I charge them in an hour? It's not about that. It's about saying what am I prepared to pay? So make sure you price yourself properly and don't be afraid. Don't be afraid. Never discount. Don't ever start with a price and then discount, because straight away everyone's pissed off. You're pissed off because you've given a discount, and the person you've given a discount, and 20 minutes after you give them the discount, they're going to be pissed off because they're going to go, I asked for 10%, but I wonder if I'd asked doing it for 15%. Christ, I should have asked her for 15%. Don't do that. If someone wants you to lower the price, okay, let me have a look and see what I can take away. Okay. And then look at your freelance business as an investment in your future. We work to provide a living today, but we also work to provide ourselves a living tomorrow. Never stop learning, figure out what costs are investments, what costs are necessary to operate, what overheads are up for debate, but don't skimp on the areas where you're actually making an investment in yourself or an investment in your future with the advice you're getting.
Yeah.
That's